Welcome, 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 everybody. Welcome to Crashes and Taxes. I am your host for this podcast, Rebecca Walser. So excited that you are with me today for this podcast. And if you are listening in the car or during your workout, which a lot of people like to do, including myself, you just want to maybe watch this one as a video because I do have additional slides. Now, these slides are actually not really not charts or anything like that. So if you're not going to see the slides this time, it's not really that big of a deal. But I want to talk about something kind of fun today because I can get depressed talking about the economy because it's depressing. Although I will say some quick notes on the economy for right now. And that is that you should expect this market to keep whipsawing day to day. We start off negative, we end to the positive. We start off, actually, we had a thrice whipsaw the other day where we started off negative, moved to the positive, and then came back negative to close out the day. That's so rare. I mean, these things aren't usual. We usually have sort of a trend that begins at the beginning of the morning, and you kind of know, and normal days, okay, the market started off down, probably likely down, started off up, probably likely up, and those conditions either get stronger or weaker, but usually you end sort of how you began usually. And when we see whipsaws, it's because the market is very volatile. It doesn't really have a good grasp or sense of where it's going. And so the slightest little nuanced news that comes out will shoot it one way or the other. So what you're looking at right now in terms of the market is the Federal Open Market Committee meeting minutes came out Wednesday, April the 6th. And what those minutes really gave us some insight into knowing was how fast this Fed wants to raise rates, which was really important for us to get some insight into, and also the runoff. So let's talk about the fastness first of the rate raises. We only got a 25 basis point raise in March, but almost half of the board was really apparently ready to go to a 50 basis point hike for March. So that means that you've got this board that's really ready to raise rates. And then what we saw in the minutes was that we fully expect that there will be another rate hike as fast as next month, and that will be a 50 basis point hike. We have not had a 50 basis point raise since 2000, 22 years ago. And we haven't had two consecutive raises, meaning raise in March and raise the next meeting, since 2006, some 14 years ago. So it's been is that right? Am I doing the math right? 22 minus 6 is 12 years ago. So, or I can't do the math right now in my head. But anyways, it's been a long time since we have had this much rate hikes this fast. 16 years ago, doing the math. So the bottom line is this Federal Reserve is going to promulgate rate hikes, and they are very aware of and gung-ho bent on getting this done pretty quickly. And so we expect that there will be, based on these notes and these meeting minutes, unless something intervenes between now and the next meeting, which it could, because obviously if you missed last week's podcast, that was a really big one about all the things that are happening right now, globally speaking. And I definitely encourage you to go back and look at that. I won't rehash it now. It's just way too much to go into, but that situation has not changed. We are still where we were on the last podcast, and it is a very big problem. So we need to keep an eye and be vigilant. And the other thing that we found from the minutes is how fast the Federal Reserve is interested in spending, or what we call running off the balance sheet. So they grew their balance sheet to about $9 trillion. And if you're saying, how did they grow their balance sheet to $9 trillion? Well, what they did when coronavirus came along and globally we decided to close down and quarantine healthy people, which, by the way, doesn't help us get herd immunity any faster when we're dealing with viral transmission. But when you close down healthy quarantine people and you shut down your economy, the US dropped 34% in 5 weeks. The Federal Reserve was the one that came in and brought that market back up by basically buying a ton of treasuries and bonds, buying the US securities and putting all of that cash into the market. The money supply, this is money supply that we're talking about. Lots of money got pushed in, and all of it went, not all of it, but majority of it went to equities. We saw that straight recovery, straight up, almost straight up. It is the most straight up recovery we've ever had in the history of the market. And that lets you know that it's purely inflationary and it's not brought on by true economic growth over time. So the Federal Reserve's balance sheet is close to $9 trillion, and they're going to start ramping up for the next 3 months, April, May, and June, their runoff of the balance sheet. Or in other words, they're reversing what they did before, and they're going to be selling off their assets, which are U.S. treasuries and U.S. bonds. And that means the government will be they'll be selling those treasuries, and that money will be sucked back in from the money supply into the Federal Reserve. They will be pulling money supply back in. And that is expected to be at a clip rate of $95 billion a month, just under $100 billion a month. $100 billion or $1.2 trillion just under on an annual basis. And so what that is going to do is it's going to be giving the exact opposite support to the market that we've been getting since 2008. It's the exact opposite. It's us basically in a non-certain economic time giving ourselves more troubles, but we have to do it because the Federal Reserve is really in charge of only two things. They have two things as their mandate: unemployment rate and inflation rate. Inflation is off the chain, the roof. Unemployment rate, not so much, only because people aren't, a lot of people have left the workforce, or there's other extenuating circumstances with Corona and et cetera, and so forth and so on. So the Federal Reserve has to do something, because when you look at, nominal inflation, which is core CPI, which is not including food and energy, gas, that basically is only up 7.9% thus far year over year. But when you add in food and energy, you're looking at somewhere between 10 and 20% real inflation. And that's hyperinflation. And that means we must do something about it. We must do something about it, and the Fed will. So that is the update of kind of where we are in the middle of the economy and the market and what's going on. But I want to talk to you about a really much more exciting thing today. And I'm going to share my screen with you guys so that you can see kind of what I am wanting to talk about. And that is Elon Musk becoming the largest single shareholder of Twitter. And so to give you some information about this has been happening since January. He's been making a concerted effort since January to buy just over 9% of total assets. The top two shareholders behind Elon are institutions, Vanguard. We can't call it an institution, but companies, Vanguard and BlackRock. I think Vanguard has got 8% and BlackRock some 7 plus something. Those are the two second largest shareholders. Obviously, those are institutional shareholders. So Elon Musk being now the richest man in the world, mostly through his Tesla stock that split 20 to 1, or it is splitting 20 to 1. But beyond Tesla, he has a lot of other things. SpaceX, for example. SpaceX was just leveraged in the Ukraine. And if you don't know what SpaceX is, if you've ever watched, I'm a nerd, but if you've ever watched, you probably haven't. But if I've watched the satellite imagery of the satellites moving over the Earth, and the SpaceX satellites have their own color, and it's phenomenal. If you ever can see a real-time satellite image of the satellites of SpaceX moving across the planet, it is amazing. So you really should check that out. But so Elon Musk has been on a concerted buy mission since January, undercover. And once he passed Vanguard, then he said, okay, I'm going to go ahead and announce this, that I am now, and I have since now accumulated he obviously announced it once he became the singular largest shareholder of Twitter. Now, one thing we must take into consideration is when you look at the actual deal that Twitter offered Elon, They reached out to him and said, hey, we'll offer you a seat on the board, but you can't buy more than 14.x% of the company. So he has now accepted a seat on the board. And in return for the seat on the board, he is stating or agreeing to not buy beyond 14%, 14 plus something percent of Twitter. And that's where the board wants him to come in at. There's been a lot of discussion this week around Elon's ability to mitigate Twitter's rules and their algorithms, and what will he have? And there's a mistaken impression by a lot of people that because he doesn't have a quote majority of shares, meaning 51% or more, that he is not going to be able to do anything. And that, frankly, is just somebody who doesn't know anything about corporate governance, because when you are the largest shareholder of a publicly traded company, you absolutely have authority and power to do things. So once you get to a 5% ownership, you have the ability to force items on the agenda that have to be covered, written resolutions you can put on a board meeting. Once you get to 10%, you have the ability to actually add agenda items, force voting, force the company to take up a vote on things for the shareholders. There's a lot of things. You have appraisal rights. You have all kinds of governance tools inside of your tool belt that you can leverage to get changes that you want to see. And obviously the biggest question is Elon going to reinstate Trump? I think the answer is going to be yes. I would think you should prepare and brace, because I do think that Trump will be back on Twitter. But you remember, Trump has formed his own media company, and it is called True Social. And it is like, I think it's only in the Apple Store right now, and it's still, I think, in beta phase. So we don't really have a lot of True Social, impact as yet, but that is coming on board. Not to say that President Trump would not want to get back onto Twitter. I don't know if he would or wouldn't. I would assume he would, because he likes to talk to people directly, and I think he wouldn't turn that down. But one other thing I found very interesting, because obviously, this tweet stood out to me back in March. I distinctly remember when I saw this tweet, Elon's up to something. So you can see that he literally asked, did a vote rather. He had 1.1 million responses. And the question was, should the Twitter algorithm be open source? And this is a really big thing, because, you have people that are on the conservative right who have been claiming for years that they have been quote shadow banned. What that means is you publicly look like you're still on Twitter. You publicly look like you're still, your tweets are still having a profile and a viewpoint and are being cast out to everybody on their pages to see what's happening on their scrolling, but you're really not. So Twitter makes it look like you're on the platform, but because of shadow banning, your message is effectively stifled. So you've seen these conservatives on the right say that is what Twitter is doing, and yet it's very hard to prove that. And one thing that I found is interesting is, even in beta mode, there's a couple of I guess you'd call them influencers that are on Truth Social that have done side by sides. I mean, Truth Social is still in beta mode. It doesn't have nearly anybody on it as yet. And yet when you look at a Twitter post which has, hundreds of millions of users on a daily basis, and you look at a Truth Social post, you can see that a Truth Social post for that conservative viewpoint gets more views than the Twitter post, which would indicate that that person's getting shadow banned. So they're starting to be able to maybe use Truth Social to prove some things about Twitter and really open it up. But the biggest question in this survey I thought was really interesting, because what Elon is saying here is we need to have an algorithm that everybody can read and see, and therefore they would have complete confidence in the transparency that it is in fact a free speech platform, because it's not right now, according to many, many people with certain viewpoints. They don't see it as a free speech platform. So once these results came in so clearly in favor of having a free speech platform of the people that decided to vote on Elon's poll, and maybe it's maybe more conservative people follow him. I'm not suggesting that that's not the case, but then you can look at this, and he comes back the next day, and after his poll is completing, he does another poll about free speech. And he says, free speech is essential to a functioning democracy. Do you believe Twitter rigorously adheres to this principle? And you can see that an overwhelming 70% of the 2 million plus votes that this poll got said no, that it is not adhering to the principle of free speech. We know that they ban people. We know they ban stories. We know that they banned the New York Post story at the end of the 2020 presidential election that dealt with the Hunter Biden laptop. They said that, they weren't going to they wouldn't even allow links to the New York Post story to be on and published to Twitter because they wanted to block all access to that story because they believed at the time that the intelligence community that signed off on a letter saying that it was Russian disinformation was in fact true, that it was Russian disinformation. Now those intelligence officials potentially are losing their clearances because 51 of them promulgated something that was absolutely and utterly false. In fact, the laptop has now been verified. So when you start to look at end of March and you start to see that Elon Musk announces at the beginning of April that he is now the single largest shareholder of Twitter, and he's doing these polls in March, I think that it's very safe for us to assume that, yes, in fact, he is going to try to make some changes to the Twitter algorithm and the Twitter censorship, and he will be on the board. And, and he will go up to 14% according to his agreement, apparently. And if he decides he wants to buy more than that, then I guess he could potentially resign from the board and force changes if he doesn't get them internally. So I think what his strategic goal is, this guy is not dumb. I don't know if you know the whole story about Elon. He's pretty genius, but he actually joined Tesla and then got the original two co-founders outed through a series of events. He is not somebody that doesn't know his way around a boardroom and a way around a company. So I would definitely tell the Twitter board to get prepared because there are changes that will come, and we'll see how it goes. And of course, if you have a situation where now Elon has again agreed to go in to the boardroom and to, do this internally. But I think if he goes into that boardroom and he doesn't get what he wants, you will see another case of another Tesla where, he can finagle things in his current position to get what he wants. And it might take some time, but I think we will definitely see. I don't see why Elon Musk, with all of his Neuralink and his SpaceX and his Tesla and the other things that he's doing, I cannot imagine he would waste his time with Twitter if there wasn't a purpose and there wasn't a goal. The man is very strategic in what he does. So it's going to be a very interesting ride to see how this plays out and to see how this will impact our public forum. I'll close this podcast because we're already at 18 minutes. I'll close this podcast with talking about Section 230 because a lot of people throw around this Section 230 of the Communications Decency Act, which is how there is a loophole for the big tech firms. And so you're probably like, I've heard about this Section 230. I've heard about it in passing in a news story. I don't really understand what it is. And so I want to explain that to you. There is an intersection of law that has to be resolved sometimes. So when we have libel laws or slander laws that prevent people from stating outright falsehoods about other people, either in writing or verbally, that could impact them. We have tortious interference of business. We have libel. We have slander. We have a lot of things that we can leverage when someone is stating something publicly that is inaccurate about you. You can, and now, it depends. There's speciality rules when it comes to people that are of public importance. For example, I think it was Jerry Falwell sued Hustler magazine and went all the way to Supreme Court because they had made an image of Jerry Falwell in a very unflattering sexual position for their magazine. And of course, he sued them. He thought that was slanderous to his, Christian stance as a leader in the faith movement that he was. And he lost at the Supreme Court level because the Supreme Court basically knew that, it's actually a trap. They, with this was at the lower court, Jerry Falwell, you don't have any testimony at the Supreme Court level, but you have at the lower court level, Jerry Falwell saying, whether it was deposition or on the stand saying, the attorney, his attorneys didn't do a good job prepping him. The attorney said to him, do you really believe, Mr. Falwell, that anyone would buy the Hustler magazine, see this cartoon and believe that you would do something like this? And of course, Jerry Falwell was outraged and was like, well, of course not. No, everyone knows that I'm, a man of God. And then that was the point. It was obviously parody. It was obviously false. It was obviously so clear that nobody would reasonably take it to be real, that it didn't in fact harm his reputation because nobody believed it. It was a parody. And so there are some speciality rules at the when you're dealing with somebody who is of public, renowned, but that is in fact, where this is headed. But I just thought that it was a great thing to take our mind off of the economy and off of the geopolitical area of law that we've been discussing so much, and the market, because there aren't great economic fundamentals. The Federal Reserve meeting minutes this week let us know that things are going to really pick up steam, and we know how everything else is going with the food and the energy and everything else. So it was a great story to sort of note on, and we'll just say that it's going to be a really interesting ride with Elon Musk and involved with Twitter, and I think it's going to be exciting. But certainly, I don't know where it will head, because if you do get more of a free platform and open speech across all political spectrums, will some people on the other spectrum leave? Will they get upset that it's more free platform? I don't know. I feel like we have to be able to tolerate each other's opinions in our country. I feel like we have to be able to listen, and have a reasonable conversation with the people that have the exact opposite opinion of us. That's kind of life. That's how it goes. So let's all be adults and see if we can all just talk to each other, and maybe we can get somewhere instead of being at each other's throats. That's how our country was meant to be, I think, as a republic and as a democracy. So for that, this is this week's podcast. And until next week, you guys, I'll talk to you soon. We'll talk later. Crashes and taxes. Take care, everybody.